If the committee approves the report, that would be the first step toward finding Bannon in criminal contempt, possibly leading to prosecution. The gang that kidnapped 12 Christian missionaries in Haiti over the weekend is demanding $17 million in ransom. The gang grabbed the 16 Americans and 1 Canadian after they visited an orphanage near Port-au-Prince on Saturday. The people being held include 7 women, 5 men, and 5 children, one of them an 8-month-old baby. The FBI and Haitian police are in contact with the kidnappers, but the defense minister says negotiations could take weeks. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Thank you so much, Nancy Lyons. Tim Stenevec and Carol Masser live from Beverly Hills, California, where we are at the Milken Institute Global Conference.
Have you had a cocktail yet here?
I actually haven't. I have a rule.
What's that?
I
have not had a cocktail either.
Well, my rule is no drinking at these things, or else I won't be on.
Well, you can't when you're on air.
I won't, but even the night before, I just won't. We're getting up too early to do that. We're just working.
I might finally have a glass of wine tonight.
Is this too much information?
Speaking of cocktails, though, I think this is kind of plays into it, a little bit of a segue. Pfizer's CEO said that mixing and matching COVID-19 vaccines and boosters could work and provide more flexibility in administering shots.
Yeah, preliminary results of a U.S. National Institutes of Health study found that mixing and matching vaccines produces as much or more antibodies as using the same shot as a booster. Borla said in an interview on Bloomberg TV's Balance of Power with our colleague David Weston that the study was very reliable, even though it only involved a modest number of patients.
Well, this is where we have to wait to hear from the FDA, the Food and Drug Administration. It is poised to authorize vaccine recipients to get a booster shot from a different manufacturer, which is interesting. The agency is still considering how broad such an authorization would be, and it's not clear when a decision could be announced. So we're just starting to see the existing vaccine makers get approval for a booster, right? Pfizer, it's happened.
Yeah.
But we're still waiting on the others.
Right, and I think
so now this is kind of another step.
Right, and I think one of the big takeaways from this, and people who listen regularly are probably bored of me saying it, but what we are watching right now happen is science play out in real time.
Absolutely.
We absolutely are.
We're
watching the testing process. Go ahead.
Yeah, no, we just talked about SPACs and transparency.
Yeah.
Like, we have had so much transparency in the creation of a vaccine.
Right. Scientists are learning more and more each day about how to treat this, how to prevent it, and the effect of vaccines, and to what extent we have to get boosters. And as consumers and as Americans, we need to understand and have patience that this is the scientific method playing out.
Exactly. But the idea of mixing and matching vaccines, right? The science at play here, and maybe the efficacy being boosted is pretty interesting. So
I'll get a Moderna.
You're up for a vaccine cocktail? This is Bloomberg.
headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. The Dow, the S&P, NASDAQ off session highs, but still advancing right to the numbers with the S&P up 25, up 0.6%. The Dow up 120, up 0.3. NASDAQ right now up 85. That is a gain of 0.6%. 10-year yield 1.62%. Equities are extending a rally as solid corporate results help counter concerns stemming from elevated inflation. We do have the S&P within 1% of a record. Spot gold up 0.3%, $17.70 the ounce. West Texas Intermediate crude up 0.4%, $82.79 a barrel. Bitcoin specifically right now up 3.4% at 63,474. After the bell, we will be hearing from Netflix. Its shares down 0.2%. Also reporting after the bell, UAL, the parent of United, down now by 2.2%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. So can I just tell you, at Milken yesterday, I hosted a panel, and it was all about the role of technology and longevity. We're talking about aging. One of the panelists studies the brain. We talked a lot about what happens as we age and what we can do about it.
You got to tell the panelists about Sarah McBride's next story.
I am totally. It's in the special double issue. It's the persuasion issue of Bloomberg Business Week. So let's get to it.
Let's get to it with Sarah McBride, venture capital reporter at Bloomberg News. She joins us on the phone from San Francisco. Sarah's story, what a brain scan reveals about the science of persuasion. It's in the current issue of Bloomberg Business Week, which Carol mentioned is the persuasion issue. Sarah, neuroscientists have come a long way in understanding how and when people come around to a different point of view. So what exactly happens to our brain when we change our mind?
Okay, well, they have come a long way, but there's still a long way to go. It sounds like that particular area of study is really tricky for neuroscientists, and that's because other things we do are more localized to one or just a few parts of the brain. For example, if you move a limb, whereas something that requires thought, like persuasion, is spread out across so many parts of the brain, it's actually much harder to understand exactly what's going on. And this was a lesson in brain science and anatomy for me. I had to learn about all these different parts of the brain that get involved, and they're asking really interesting questions, like if you're analyzing something, how do you separate those neurons to the neurons you use in memory, like when you're trying to remember what you analyzed previously or what your previous opinion was? And they scanned my brain, which was fascinating, and they're looking at areas like the ventromedial prefrontal cortex and the central striatum and all these things which are kind of spread out in different areas across the brain and reflect persuasion.
I mean, we're talking about... Yeah, go ahead, Joel. Come on in. Joel Weber's with us, Bloomberg Business Week editor back in New York.
Sarah, I just have to thank you for lending us your brain and like actually letting us even publish a photo of your brain. So what was the whole process like?
So different.
What was the whole process like to have your brain scanned for the purposes of persuasion?
Science. So I'd never done anything like this, and I was hoping that they would have something very interesting to say about my brain, but they were like, yeah, it's very similar to the 45 other brains we looked at for this study. So
hey, come on. That's my brain you're talking about.
Your brain is special.
Right. So I had to get in this fMRI. I don't know if you've ever done that before, but it's just a weird experience. You're in this big cylinder. It's very noisy. You can't really move a whole lot in there. My head was kind of strapped in. They even gave me a little alarm unless I suddenly got claustrophobic and needed to come out. But they kind of arranged these mirrors and screens so that I had the sensation of having more room in there than was actually the case. And then, believe it or not, I just got to watch cartoons.
Sounds like the greatest assignment ever.
Careful, you're talking to your boss here.
So as you're watching cartoons, like let's kind of get to the point where this becomes a business story again.
What cartoons?
What are the potential takeaways for the frontier of this research and what it means for where persuasion and business could go?
Yeah, so they wanted me to watch normalized behavior, which was why they were watching screening cartoons where things like being unhealthy or not taking care of the environment were just standard in the cartoon. And then they showed me persuasive messages to see if I just kind of been shown the opposite, what would my brain be doing when I was now shown, okay, you should exercise or you should recycle. So the implications for this are pretty big for anybody trying to sell somebody something or a politician trying to get somebody to vote for them. So there's actually millions of dollars being invested in this science. And the hope is that we'll kind of know exactly what parts of the brain are affected when you're persuaded, which means not only will people be able to better persuade you, but the general public will also have a better idea of what's going on too. The science will kind of build up on both sides. So it sounds a little
just think about marketers,
scary.
Right? Like sales and marketing. Like just think about exploding this.
That's my question for you, Sarah. And I'm wondering, when you reported this story, when you went through this experience, if it makes you think differently about the way that you see advertisements, the way that people try to sell you something. I mean, are you taking do you have a different way of thinking about that now?
Oh God, I've always been so susceptible to advertising. It's ridiculous. But yeah, no, now I do kind of think about it, like what little things they might be tweaking. And I hadn't devoted much thought to this idea of your social conditioning and what happens if people all around you think one thing, how much harder it is to change your mind about that. And then there are very fascinating things they're studying, like what happens if you're pretending to agree with something, whereas deep down you don't really, but you want the social credibility that goes along with agreeing with your friends. So there are so many layers of this. It's really nuanced and fascinating.
Sarah, I just wanted to say, when I saw your brain, I was like, that looks like someone who's very perceptible to persuasive sales pitches. This is like,
But she's watching a lot of home shopping at night
and also
ordering.
cartoons.
No, like show me an ice cream cone and I'll immediately think, oh my gosh, that looks delicious.
So how much more research do we expect to be done before this might enter, the next phases of applications?
Well, it's one of these things where they've made tremendous strides, but then it's just kind of showing them how much farther they have to go. So each piece of information they gain is just one more step, but advertising is constantly being tweaked based on what we know and what people think they know about the brain. So I think elements of it will be reflected in advertising and marketing in just a few years, and it'll get better and better the deeper they can go into the brain and the more they learn about it. I'd say 5 to 10 years.
I wonder if Joel walked in, would they make him watch like the Squid Game or something?
Oh God!
Joel.
I can't think of a worse thing to do than put me in an MRI machine and make me watch Squid Game. Like
this is your brain on Squid Game.
I'd be pushing that
pictures.
button to get me out of there as quickly as possible.
All I know is I want those images. All right, guys, we got to run. Venture capital reporter at Bloomberg News, Sarah McBride. Check out her story, What a Brain Scan Reveals About the Science of Persuasion. This is fascinating. She, of course, was joining us with Bloomberg Business Week editor Joel Webb. That's in the current special double issue, the Persuasion issue of Business Week magazine. You're listening to Bloomberg Radio.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Tape. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We begin with a headline from the Bloomberg Professional Service. Homeland Security Chief Mayorkas has tested positive for COVID. This according to CNN. Developing story, more details as they become available. We're looking at an update on Wall Street off-session highs. Green on the screen, 1 hour to go ahead of that closing bell. The S&P right now up 27 points, up 0.6%. The Dow up 132, up by 0.4%. NASDAQ up 90, higher by 0.6%. Bitcoin up by 3.4%. 10-year yield right now 1.63%. Gold up 0.3%, 17.70 the ounce. West Texas Intermediate crude up 0.6%. 82.94 a barrel was trading above $83 a barrel today. Equities extending a rally as solid corporate results help counter concerns stemming from elevated inflation. Goldman Sachs CEO David Solomon says the Wall Street firm will not abruptly stop working with fossil fuel companies, stressing the need for a balanced transition to green energy that avoids higher energy prices. He made the comment during a Bloomberg television and radio interview today in London.
All of this is a balance. The most aggressive point of view on the transition and the least aggressive aren't right. It's a constructive partnership between governments and the private sector to make sure, we protect our society and get capital into technologies that can evolve and help us make the world greener. And I firmly believe that's something we can do, but it's something that's going to require a lot of focus and a little bit of patience, but with appropriate intention and energy and commitment. And we certainly have that.
Goldman's David Solomon and Goldman Sachs shares right now, they are down by 0.5%. Coming up after the bell, we will be hearing from Netflix, down now by 0.1%. Also reporting today, UAL, parent of United, down 2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
Yes, indeed, everyone. Bloomberg Business Week, and it is brought to you by SEI with an operating platform designed to support all major asset classes, diverse strategies, and investment vehicles. SEI is redefining wealth management. Learn more at SEIC.com/IMS.
Well, the stock is up nearly 2,000% this year. The company's CEO is known to retail investors as the silverback because they are the apes. We are talking none other than Adam Aron. He's the chairman and CEO of AMC Entertainment. He joins us now here at the Milken Institute Global Conference. Adam, it's good to see you. It's been a long time.
Tim, nice to see you again.
How are you?
I'm great. If you had told me, I've run AMC now for almost 6 years. And the company that I joined was the second largest movie theater chain in the United States. A year and a half later, it was the largest movie theater chain in the world. Everything was just happening just fine. And if you told me in February of 2020 that we would somehow relive as people on this planet the Spanish flu epidemic of 1918 and 1919, I just couldn't have imagined in this era of modern medicine that we would, in our near term, go through the last year and a half of disease and lockdown and mask wearing and just think about all the loss and pain that has been suffered on this planet. Everyone has financially sacrificed. Everyone has been overloaded with stress, except the people who work at Clorox. Their business is really booming. Nice people, though. They helped us with our safe and clean protocols at AMC theaters. And many people got sick and many people died, but that's only part of it. And that was the story of 2020, where AMC did everything in our power to avert financial collapse. But we did. We raised billions of dollars in the equity and debt markets, got incredible assistance from our theater landlords and our lenders. And we entered 2021 knowing that we could survive this pandemic no matter what came. Then what we would never have predicted was that retail investors would descend on AMC the way they have this year. And so, yeah, it's been a fascinating 2 years, needless to say.
They certainly have descended on AMC, and you announced earlier this year a program for retail investors, free popcorn, a platform for them on the website. It does, though, seem like they're losing a little bit of momentum. The folks at Vanda Research said that retail traders have bought less than $16 million in AMC stock over the past week, compared to $600 million at the height of things earlier this year. What are you working on to continue to connect with retail investors?
Well, I have no sense of whether they're picking up steam or losing steam through the research tools that you're talking about. But I do know that I tweet every single day, almost every day. I take a day off every once in a while from my Twitter feed.
It's healthy.
But my tweets, I started tweeting in earnest in April. And every single day, my Twitter followers increase. I'm at 190,000 this morning. My average tweet is read 1.1 million times. My tweets since April have been read cumulatively 130 million times. Just 3 or 4 weeks ago, I put out a tweet that had my all-time highest readership at almost 6.5 million people read one of my tweets.
Unwelcome or unwarranted celebrity? Like, are you, I mean, you've become a celebrity of sorts, especially on social.
Nah.
Well, your company and your stock certainly have been. What is it about the business that justifies the run-up that we've seen in the price? Because I'm looking at it in terms of, your market cap. You're well over 20 billion at this point, roughly 5 times the value it was if you go back to 2017. That's when we saw the industry and economy much, much better place. So how do you actually deliver on the growth expectations there? Those are high expectations. That's pressure.
So the answer to your question is that back in June, I think it was, when we were raising money yet again, we put out a very important disclosure. So important that the Wall Street Journal carried it on page 1 above the fold in a banner headline.
Right.
Where we cautioned investors that we were trading away from historic fundamentals and that something entirely different was going on at AMC. And I don't think you drive a car by looking in the rearview mirror only. And so you drive a car by looking through the windshield and looking what's ahead.
Right.
And our goal at AMC is not just to bring back from this pandemic the company that existed in 2019. And our shareholders, thankfully, have armed us with what at the end of the June quarter was more than a $2 billion war chest of cash in the bank or undrawn revolving credit line to put to work to fundamentally transform the company. And that's what we're engaged in right now. In addition to bringing back the company of old, because look, there's some really good news for AMC, the movie theater company. And yet we have a way to go. So the really good news is that if you look at the period of October 1 to 14, the first 2 weeks of this month, it was the biggest 14 days of industry box office, which is the basic measure of the health of our industry. This, what the revenues are. It was the biggest 14-day box office since February of 2020, since the pandemic started and forced the closure of theaters. It took a long time, took 20 months, but finally, we got the highest box office in over a year and a half. Now, we're still not at 2019 levels, but if you compare the box office so far in October to the box office in the third quarter, or the box office in the second quarter, or the box office in the first quarter, or the box office last year, you can see this enormous progress we're making. Now, that's...
Hang on a second, because we have to do a commercial break, but we're going to come back and do some more.
Sure.
Yeah, one thing I want to talk about is if we ever, yes or no, do we ever get back to pre-pandemic levels, 2019 levels?
In my judgment, yes, but the question is when.
When do you think?
We're not in the business of making predictions. We're in the business of trying to make it happen as soon as we possibly can make it happen.
Okay, sit tight. We're going to do some news, and then we're going to come back with Adam Aron. He's the chairman and CEO of AMC Entertainment. In the meantime, a check of the latest world and national news. Nancy Lyons is standing by in D.C. Hey there, Nance.
Hey, Tim. Secretary of Defense Lloyd Austin is calling on Russia to stop its persistent cyber attacks against the U.S. He also listed other concerns while visiting with leaders in Ukraine.
We again call on Russia to end its occupation of Crimea, to stop perpetuating the war in eastern Ukraine, to end its destabilizing activities in the Black Sea and along Ukraine's borders.
Austin is traveling throughout Europe. The police chief of Tucson, Arizona, who's the man tapped by President Biden to head up Customs and Border Protection, has appeared today before the Senate Finance Committee. Bloomberg's Irv Chapman has more on the confirmation hearing for Chris Magnus.
Republicans accused the Biden administration of laxity in border enforcement. Senator Mike Crapo asked Magnus,
will you commit to enforce our immigration law at the border?
Clearly, we have a broken system. So, yes, Senator, I will commit to enforcing the law. We absolutely do need more Border Patrol agents out on the line doing what they were trained to do.
Senators also called for customs enforcement against counterfeit goods and imports made with forced labor. There was no indication of opposition to Magnus being confirmed. In Washington, Irv Chapman, Bloomberg Radio.
The fate of Americans and others being held by kidnappers in Haiti remains unknown, but we are learning the gang that took the 17 workers from a U.S. aid group are asking for $17 million in ransom, $1 million for each of their hostages. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
Thank you so much for that update, Nancy Lyons. We're still with Adam Aron, Chairman and CEO of AMC Entertainment. Adam, you referred to the war chest that you have at AMC Entertainment right now. What are you doing in order to transform the theater experience to get people back into the theaters, especially at a time when they're saying, wait a second, I can just watch this on streaming in a couple weeks?
Well, we have two challenges as a company. First, we have to continue to innovate at our theaters and so that we get more moviegoers and more theater goers coming to our theaters. This is something AMC is pretty good at. We've been the innovator in our industry for many years now. And some of the things that we've just done in the last few months, we started showing professional sporting events. We are showing professional football on Sunday afternoons, for example. We've had some UFC fights, some WWE matches. We had a big professional boxing fight the other night. In addition, we've been showing some live concerts or some concert movies. Both.
Does it move the needle?
People go to them and they enjoy it, but we've got to do something that's much bigger than just continue to innovate at our theaters.
Mm-hmm. Right.
Because if all we do is innovate at our theaters, we're going to bring back post-pandemic the company that existed in 2019.
Right.
And as you said in your build-up in the last segment, the market cap of that company wasn't $20 billion. So our next challenge is to transform the entire company, not just transform the theatrical experience. And in that, you're correct. We ended the second quarter with more than $2 billion of cash and undrawn revolving credit line. We're going to do something with that war chest and add lines of business that are related to our expertise, but not necessarily being a pure movie theater play.
Adam, in 20 seconds, you said you recently said that you'd accept crypto, including Dogecoin, Bitcoin, Litecoin, and more. Are people buying tickets in crypto?
They are. Right now, they're buying gift cards in crypto. But in a few weeks' time, we'll actually be able to take cryptocurrency for online purchases of AMC tickets and AMC movie concessions at our theaters.
All right, we got to run. Adam Cole, come back. We'd love to talk about Adam Aron over at AMC Entertainment. This is Bloomberg.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters. I'm Charlie Pellet. The Dow, the S&P, NASDAQ, all pushing higher, close to session highs. Lots going on. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. That's right. U.S. stocks in the green today with the Dow currently up 171 points. S&P's gained 31 and NASDAQ rises by 106. The U.S. 10-year yield at 1.63%. Gold is up 5. Transports rise just 20 points. And Bitcoin climbs 3.5%. Among the main 11 S&P sectors, only consumer staples and discretionary were in the red. And leaders to the upside in the Dow, Merck and Walmart, while Procter & Gamble and Nike led to the downside. After earnings, Travelers rose, Philip Morris fell, and Ulta Beauty fell as much as 9.6% after announcing long-term targets. In other news, Nikola is allowed to proceed with a lawsuit against Tesla, and the Bitcoin futures ETF started trading today on the NYSE. Wrapping things up, Netflix reports after the bell. Live from the first breaking news desk, I'm Bill Maloney. Charlie.
Okay, we thank you very much, Bill Maloney. Best level of the day right now on the S&P, and to hear live breaking news over your Bloomberg type squawk, SQUAWK on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So we talked a lot about sustainable investing yesterday and all of the money going into it, but I'm really looking forward to this next guest. We were just talking before we got going because there is ESG and then there's impact investing, and this is something that's certainly in her world. Joining us right now is Joanna Reese. She's co-lead, I should say, of impact investing at Apollo Global Management with us on site at Milken. Nice to have you here on Bloomberg.
Thank you so much for having me.
We did start talking, and I threw out something about ESG, and you're like, well, wait a minute, Carol. There's a difference between ESG and impact. So talk to us about that, because it does get used, I think, sometimes interchangeably.
Yes, the terms definitely run into each other, and everyone has their own set of terms.
Yeah,
so how we
which is part of the problem, right?
Which is part of the problem, but we'll get there.
Okay.
So ESG has been around for a long time. We at Apollo just issued our 12th annual ESG report, so it's a big focus on the part of our firm, really on the part of any alternative asset manager and any asset manager overall. And we think of that as the ownership practices of the company. Being mindful of the environmental, social, and governance factors associated with a specific business, measure them, get better, understand what's unique to the company you own. So that is relevant to any type of company, and any type of ownership. So you would focus on ESG whether you were looking at, a green energy type player, as well as if you were looking at something that was on the far end, on the other side.
Like an oil company?
You won't say it, but I'll say it. Coal company.
Indeed.
We're there for you.
You could still focus on ESG. If you run a coal mine, you can still get better.
Is that troubling to you, though?
Not at all, because I think we need to, as asset owners, engage with the companies that are where they are today. But that is separate and apart from what we're looking to do on the impact side, which is building upon that foundation. The data points are astonishing just coming out of Apollo. Our last report has data on 57 companies that have 300,000 employees across their employee base. So it's a huge effort.
Right.
But what we're doing in impact is related in the sense that we still need to be focused on ESG. We still need to report on it, get better at it. But impact is investing in companies where their goods or services improve the world, either socially or environmentally, directly. So it's not just that they donate to the local charity. It's not just that they have great governance practices. It's that what they do for a living makes the world a better place.
So give us an example.
So the first investment we made on our platform is a company in the circular economy. The company's called Reino de Medici. They manufacture recycled carton board in Europe. So, that's a very clear sustainability story where by the company recycling those fibers, they can be used 7 times. It's so much better environmentally than either using virgin fibers or using, God forbid, like plastic packaging.
Right.
And so, that's a company we're looking to support, to continue to grow, to consolidate that industry and build upon their environmental leadership, which we think is, fundamental to what the company does. And that's why it's a non-concessionary investment. It looks a lot like any other investment Apollo would have made.
Right.
It just happens to be in a company that is focused on driving environmental
Do you
change.
look, and you look at the same metrics, right?
Absolutely.
Okay, because I do think that there's always like, okay, do we do a little bit of a trade-off in terms of performance or something? But I mean, Apollo, you guys are looking, you're managing money for your investors, right? And there's going to be, that exit point, and you've got to make some money.
Absolutely.
The returns.
We're underwriting the exact same way that
Yeah.
we see in like our large cap fund. With the added focus on what is the impact that that company has, how do we measure it, how do we maximize that through our ownership period. But the concept that impact has to be concessionary, I think, comes in part from trying to shoehorn assets that don't have that kind of fundamental, mutually reinforcing dynamic that a company in the circular economy has, where if they grow, earnings grow, they're also doing better for the world. If you're trying to be
They're having an impact in a positive way.
If you're trying to buy a company where profit and purpose are in tension every day and do it in an impact portfolio, you're going to have to make that decision.
Joanna, are you ever doing any due diligence and you say to yourself, well, the numbers are there from where we think expected returns are going to be, but ESG just isn't, and as a result, we have to pass?
Absolutely. That happens with ESG across our platform, where we find businesses with business practices we can't fix, and we walk away. But for us, as we do that, and then we also do our impact diligence. And if we can't confirm to ourselves that there is a tangible, measurable positivity, either socially or environmentally, from what the company does, we're not making that investment.
But what happens then, or do you leave it then to the venture capitalists, the angel investors? Because there are going to be those firms that will change the world. Look at an Elon Musk and Tesla, and for how long people are like, yeah, whatever, right? And here he is today, right? And if the investment money wasn't there to back it up, what a shame. So, but do you leave those companies that financially might not fit your criteria at Apollo and say, okay, there's plenty of other money at the venture or angel stage, and then when it grows, we can jump in?
And the preponderance of capital focused on impact in private funds is focused on early stage businesses.
Yeah.
And there are people who are doing incredible work supporting, hopefully the Teslas of the future.
Yeah.
That's just not us. And so we're looking to do impact, what we call impact at scale, later stage businesses, EBITDA and cash flow positive, but to widen that aperture away from thinking that the only company that can have impact is a newborn company that is so mission driven. The company we just acquired was founded in 1967.
Which is great.
They didn't start out planning to improve the environment. Right. But that's where they are now.
Right.
Joanna, very briefly, do we get to a point within our lifetimes where ESG is no longer a thing because it's just everything adheres to ESG standards?
That would be great, but I think where we are as a human beings is to constantly push for more.
Yeah.
And so if we can improve the employment practices of our businesses, we'll raise the standard.
Joanna Reese over at Apollo, thank you.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
So it's 3:31 on Wall Street. It is 12:31 on the West Coast,
Means
which
it's
is where
lunchtime.
we are. I know the little
Yeah.
lunch baggies are lining
They
up.
are lining up, and I hope our crew is grabbing some lunch for us.
Charlie, just
We got it.
Oh, man.
All right. Well, it looks like that's okay. We'll get lunch.
We're on our own. Hunger Games. They begin. All right. First up, let's get back to the trading day. We're going to get to the chart of the day in just a moment, but let's get an update on today's trade. Hey, Charlie Bellet.
Well, hello there. Let's hope you all get lunch. We've got the Dow, the S&P, NASDAQ all advancing. We're off session highs. 28 minutes to go until that closing bell clangs here on Wall Street. S&P right to the numbers, up 27, a gain of 0.6%. The Dow up 140, up 0.4. NASDAQ up now by 94, up by 0.6%. 10-year down 11/30 seconds. 10-year yield right now 1.64%. Equities are extending a rally as solid corporate results help counter concerns stemming from elevated inflation. Gold up 0.3%, 17.69 the ounce, and West Texas Intermediate crude up now by 0.4%, 82.77 a barrel. Bitcoin rallying 3.9%. Homeland Security Secretary Alejandro Mayorkas has tested positive for COVID and is now working from home. Mayorkas was fully vaccinated. Southwest Airlines scrapping a plan to put unvaccinated employees that applied for but have not received a medical or religious exemption on unpaid leave in December. This according to CNBC, citing a note sent to staff. As COVID cases stabilize in many parts of the country, are we likely to see a reversal as we head into winter? Dr. Amish Adalja, senior scholar at the Johns Hopkins Center for Health Security.
It's important to remember that our goal is not to eradicate or eliminate this virus. That's not possible. We're always going to have cases. And in the winter, I suspect there will be an acceleration of cases as it gets colder, less humid, less sunny, people more indoors, more people back to their activities, holidays. All of that's going to drive cases, but the goal has always been to decouple the cases from hospitalizations and deaths. And I think that's happening with vaccination and natural immunity, and that's what we're seeing with the South and places that got hit hard.
And Dr. Adalja was interviewed on Bloomberg Surveillance this morning. The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Checking some of the vaccine names that we follow on a regular basis. Pfizer up 2%. Its German partner BioNTech, its ADR is up 1.3%. AstraZeneca's ADR is up 1.6%. Moderna slumping now by 0.9%. J&J Johnson & Johnson up 2.2%. After the bell, we will be hearing from Netflix, down now by 0.1%, and United Airlines Holdings, UAL, down by 2%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Thank you so much, Charlie Pellet. This is Bloomberg.
Don't you?
Carol's dancing.
CSNY.
Nice.
Absolutely.
I mean, come on.
Let's
You know,
Hint, title track of the album.
Oh, gosh. I don't know. I don't know, Dave.
Okay. Now, David Crosby is about to sing on that part. I feel like I've been
And
here
then I was going to say, isn't that the title? Yeah.
Okay.
Yeah.
What's the title? What's that feeling?
Deja vu?
How's it described? Come on, Tim. You know.
No, I don't.
If you feel like you've
You should
been
see.
someplace before,
I'm like,
what's it
you
called?
know, deja vu. Yeah, Carol
There
just
you
said it. Deja
go.
vu.
Deja vu.
I knew you
Oh,
could
you didn't
help.
hear. Oh, I thought you heard Carol.
I said it.
Yeah, that was all Carol.
No, all right.
You
It's
boys
all
just
good.
stick together.
You know, I'm just trying to throw
Man.
Tim a bone here. I knew that song
I
was
appreciate
more in your
that, Dave.
classic rock wheelhouse, Carol.
He's fine.
You know, since-
he doesn't need bones thrown his way.
Since we're remote, Dave, you can't see if I'm Googling or not, but I just would feel too bad Googling. So I'm, hands
I
are
mean,
up.
You're so
I'm
honorable.
watching the
Yeah.
video
Don't do
screen,
it.
Tim. I think I would
Okay.
see you if you were Googling. So there.
Dave Wilson's
nice
always watching.
try. In any case, why
cameras everywhere.
deja vu?
Okay,
Let's
get
get
to your
to
chart.
that. Absolutely. Well, today is all about this new Bitcoin futures exchange traded fund from ProShares. And so that kind of got me thinking, where have we seen something like this before? An ETF that's based on the value of futures contracts or that invest in. Mm-hmm. Well, turns out you go back to the United States Oil Fund, and that's one example. It was kind of prominent last year when you saw oil fall below zero and they had to sort of change their methodology in terms of what they were buying and so on. But anyway, the question when you have a futures-based ETF and there are costs associated with going from one contract to the next and all the rest is how well can it keep up with the value of the underlying asset? Well, if you look at the prospectus for the U.S. Oil Fund, all it promises to do is over a 30 trading day period come within 10% of the average daily percentage change in West Texas Intermediate crude. It's like, huh? That's not exactly tracking. And if you go back and look all the way to 2006, as the chart does, when the ETF was introduced, you find out, well, it's down about 90% over that time. And given the rally we've seen in crude lately, it's actually up from where it was at that point in 2006 when the ETF was introduced. So a very different performance. So it kind of makes you wonder whether the Bitcoin futures ETF and whether it's ProShares or any of the others coming out are going to have similar challenges.
Well, it's really interesting, too. There was some great discussions on Bloomberg Surveillance this morning about this, and that, this is a way of having exposure to crypto without having to really own the underlying asset, which is different from other commodities. If you think of Bitcoin as a commodity, right? If oil, right? At some point, somebody actually owns it, and there's real value there. It just was interesting in terms of how you think about what cryptocurrencies ultimately are.
Yeah, just look at the interest in it today.
Yeah, well, Bitcoin, right, was above 62.
Yeah.
I didn't. So moving up. All right, so that's the chart of the day. What's your stock of the day, Dave?
That would be Consolidated Communications. The ticker is CNSL. We're talking about a local phone company basically, and it's one that has 3 analysts following it. So at this point, according to our data, anyway, you have Wells Fargo with a buy, in essence. You have Cowen with the equivalent of a hold, and you have Citi, which just cut its rating to the equivalent of sell. So actually, sell, I shouldn't even say the equivalent. They actually use the word. The firm, they're concerned about how expensive the stock is and whether a deal that the company made with Searchlight Capital Partners is going to dilute the value of the existing shares. Well, you put all that together, Consolidated Communications down more than 10% and headed for its biggest decline since March of last year.
All right, great stuff. Dave Wilson, thank you so much. And you can check out Dave's stock of the day. You can find that at 4:15 p.m. Wall Street time on Facebook, LinkedIn, and on Twitter at The One Dave.
Let's head to Washington, D.C. for a check of the latest world and national news. Nancy Lyons is standing by. Hey there, Nance.
Hey, Tim. President Joe Biden's climate change strategy is now a work in progress. Lawmakers are meeting at the White House today to search for new ways to reach emission reduction goals that can still win passage in Congress. Bloomberg's Amy Morris has more on a possible Plan B.
The plan aims to decarbonize the nation's electric grid by 2035 by paying utilities for using clean energy and penalizing those that don't. But the program might not make it through Congress now that West Virginia Senator Joe Manchin says he won't support it. Democrats are struggling to come up with an alternative. Sources tell Bloomberg some options include a tax on carbon dioxide emissions, expanded loan guarantees for clean energy technologies, and a program to compensate industries for emissions reductions. In Washington, I'm Amy Morris, Bloomberg Radio.
Well, how soon before the air travel business fully returns to normal? Delta CEO Ed Bastian has a good idea.
By summer of next year, hopefully, our business will look pretty close for business as well as international and domestic consumer to where we were in 2019.
And as for the industry's financial rebound, Bastian tells Bloomberg it'll depend on fuel prices, which have recently doubled. No one was seriously hurt when a plane carrying more than 20 people crashed this morning while taking off from an executive airport outside of Houston, Texas. Chelsea Alfaro was working on a road nearby and says she saw a fiery explosion.
I was sitting here and I saw in the rearview mirror, I just saw it go boom, and it was a big orange explosion, and smoke went up and you could smell it.
Officials say the MD-87 jet was heading to Boston. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. Carol Masser, Tim Stanovic, live at the Milken Institute Global Conference in Beverly Hills. So remember we talked about that Apple and that $19 screen cloth?
Yeah, it was one of the many announcements at yesterday's big Apple unveil. Just in time for the holiday season, by the way.
Just in time.
Interesting
Something for
how they do that.
For the stocking.
If they can get the supply chain figured out.
There is that. All right, the other story is Apple took the most aggressive step yet to strip Intel chips from its computers, announcing more powerful homegrown, Mac processors alongside a total revenge of its revamp, I should say, revenge, boy, what would Freud say, right? Alongside a total revamp of its MacBook Pro laptop computers. But we shouldn't be shocked. We know that Apple has been out there to make their own chips.
Right, increasingly developing their own silicone in-house. The company showcasing the chips at the event on Monday, it's called Unleashed. It includes some audio products as well. The new components are called the M1 Pro and M1 Max chips. They are 70% faster than its M1 predecessors, that's according to Apple. The company also unveiling a MacBook Pro that has been redesigned with larger screens, MagSafe charging, better resolution, and one thing getting a lot of attention online are sort of a throwback when it comes to the ports. Because a few years ago, Apple was heavily criticized for removing a lot of ports.
Right.
And now they're bringing some of those ports back, including to actually get your
different device.
SD cards in there, too, for cameras.
Okay.
Yeah.
But what's interesting is this is Apple really going after the high-end chip line, right? I
Yeah.
mean, this is pretty aggressive. And this is what Intel has provided for the MacBook Pro and other top-end Macs for about 15 years. You might recall last year, Apple started transitioning its low-end Macs to its own M1 Apple Silicon chip. The new chips, however, are a bolder stroke aiming at far outclassing Intel's highest-performing products, which also means they're more costly and probably higher margin products. So this is going to Intel's bottom line.
It is.
Potentially.
It is. Speaking of bottom lines, Apple shares rising yesterday as much as 1.4%. They are underperforming the S&P 500 and NASDAQ this year. They've gained 9.2% through the end of last week so far this year.
Right. And as for today's trade, we're seeing the stock up about 1.3%. This is Bloomberg.
sports, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We've got 13 minutes to go ahead of the closing bell. 13 minutes until we hear from the likes of Netflix. Shares up now by 0.1%. Also reporting after the close, United Airlines Holdings, UAL shares down now by 2.1%. Stocks, though, extending a rally as solid corporate results help counter concerns stemming from elevated inflation. S&P up now by 28 points. To be clear, we're off session highs, but still in advance of 0.6%. The Dow's up 144, up 0.4. NASDAQ up 92. That is a gain of 0.6%. 10-year down 10/30 seconds. 10-year yield right now 1.63%. Bitcoin rallying now by 4%. 63,855 on Bitcoin. Gold up 0.3, 17.69 the ounce, and West Texas Intermediate crude up 0.5%, 82.84 a barrel. Crude West Texas Intermediate have been trading above $83. So again, recapping equities higher. We're off session highs, but the S&P up right now by 29 points, up 0.7%. I'm Charlie Pelleton. That is our Bloomberg Business Flash.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a toy. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's
the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
Well, it is just about 10.5 minutes away from the market close on this Tuesday, October 19th, 2021. Tim Stenbeck and Carol Masser, we are live at the Milken Global Institute conference here in Beverly Hills, California.
We are indeed. We've got a great guest to talk about today's trade. Lamar Villery is portfolio manager at Villery and Company, joining us right now on the phone. And it's great to have you here with us. You've got an interesting market environment. You've got over $2.3 billion in assets under management, and you're in a great place, New Orleans, which I love, a great city. How do you see the investment environment there right now, Lamar?
Well, as you guys are aware, things are kind of expensive. The market's near all-time highs, and
yes.
There's some pretty big overhangs in terms of inflation and whatever the next shoe is to drop on COVID or whatever variant and the supply chain, which you guys are probably see out your window out there in Los Angeles, what's going on with that. So definitely some overhangs and things to be concerned about. But, as always, there are some pockets of opportunity. So we're seeing some things and we're making some buys selectively here.
You sound more glass half empty than glass half full. Is that fair?
Well, probably so. I mean, so we're not ETF type investors. We don't just run in and say, we're going to buy the market today or we're going to sell the market. What we do is we say, the majority of the market looks to us pretty expensive right now and probably not very attractive in terms of trying to put together a portfolio. But fortunately, as luck would have it, we are stock pickers and there are some stocks out there. And as y'all know, we're really more focused on the small and mid cap market. We do some large caps, but that gives us some opportunities to find some things that are attractive in spite of kind of the overall picture.
What are some of those companies that you are seeing as attractive right now?
Sure. So one of the ones we really like right now is a company called Open Lending. Open Lending basically helps auto lenders, or whether they're just the lenders themselves or the car companies, the OEMs, match up with the what we call the near prime market. So lenders historically do a pretty good job of, you've got banks and the OEMs lending to the prime market, and you've got the finance companies lending to the subprime. But almost half the market's kind of stuck there in the middle with FICO scores between 560 and 700, give or take. Like I said, that's about a $250 billion a year opportunity, and LendingPro really fits right in that niche and helps the lenders get matched up there. They're not taking any loss exposure, but on the average loan, they're making nearly $1,200 on the average loan. So they've got a nice niche, and they're growing rapidly, and their margins, their EBITDA margins are almost 65% and growing. So we think it's a pretty attractive little company.
You know, Lamar, it's a top holding for you guys in your equity fund. I look at the share price just going back maybe the past 6 months. It's been a pretty volatile ride for this company. So do you have to have a strong stomach, or what's fundamentally going on here that investors like it, don't like it, don't like it?
Sure. So we think a lot of that has to do with just, uncertainty, and that's typical in the small and mid cap market is people getting queasy on different things. Basically, a lot of it had to do with
more sensitive to the economic reopening, to COVID headlines.
That's what people think. So I think a lot of people looked at it and said, wow, new car sales are being hurt by the supply chain, when in reality, over 80% of their loans in the last year have been in the used car market. So I think there's a little misunderstanding of where they kind of fit into the overall picture and what the right drivers are to look at.
Hey, what about when it comes to Caesars Entertainment? That's also one of your picks. What's attractive to you about CZR?
Okay, so what originally attracted us to Caesars, or at the time it was El Dorado, which acquired Caesars, was the management team. These guys have done a fantastic job of driving performance, both in terms of growth and margins historically. What we write the company dropped precipitously when Las Vegas was essentially shut down and has really rocketed back. These guys are the largest U.S. operator of casinos. They don't have any Macau exposure. We think that's pretty attractive because that's a dangerous area. But what's exciting about it here is the growth in the online esports and online gaming market. They're going to spend about $1 billion to grow that business or to market that business in the next 2.5 years, and we think it's going to generate about $1 billion a year in EBITDA. Effectively, if we buy the shares at these rates, we think you're getting that business for free. You're basically paying for their profitable casino business, but you're not really getting, you're not paying much for this strong growth picture that we see. And we think they've got an advantage over the other new entrants. Because they're Caesars rewards.
Yeah. Forgive me a little more. How much of the enthusiasm, though, over that and the expectations of that business already factored in? I mean, stock's up more than 50% so far this year.
Yeah, we think that very little of that is the online gaming piece. In fact, most of that is just the return, as the metrics in Las Vegas have
bounced back,
hugely. What really drove the shares down was that there was a sense that there was some bankruptcy risk, and they had a lot of leverage. They've done a great job of delevering, and Vegas is absolutely booming right now. So we think you're really just paying for that business.
Hey, just got about a minute or so. Freeport-McMoRan. I mean, we've constantly watching the energy space right now because of the supply chain disruptions, watching supply and demand. I mean, stock's up 49%. I understand it. Energy has been, by a wide margin, the outperformer of 2021. What's your take specifically, though, on this name? And again, it plays into your space here.
Sure. So Freeport, this is a little bit larger cap than we normally invest.
It is.
$45 billion market cap. What we like about these guys, number one, is we prefer their exposure to copper than having exposure to oil. We think that's a better place to be. The growth vehicle, or the growth trajectory, comes in large part because of electric vehicles. About 183 pounds of copper go into an electric vehicle versus between 20 and 50 pounds into a conventional vehicle. So that's going to be a huge growth, and the infrastructure spend to support this. Specifically for Freeport, so we like the commodity. Specifically for Freeport, they've done a tremendous job in the last year. They've cut their debt more than in half and are continuing to cut it. And we think next year there's going to be a huge amount of cash return to shareholders, and we think that'll be a great opportunity.
All right, we're going to leave it on that note. Lamar, thank you so much. Love talking names. Lamar Villery, he's portfolio manager at Villery & Company. They've got over $2.3 billion in assets under management, joining us on the phone from New Orleans.
All right, well, just a couple of minutes away from the market close. This is Bloomberg Radio, and it is 3:56 on Wall Street.
The following is an editorial from Bloomberg Opinion.
Scandal overshadowed the recent annual meetings of the International Monetary Fund and World Bank. The IMF's managing director, Kristalina Georgieva, had been accused of bending to political pressures and improperly influencing a World Bank report in her previous job as the bank's second in command. The IMF's board recently decided to let Georgieva stay on, but its endorsement was tepid. The independence and credibility of the IMF and World Bank are indeed compromised, but not by any one individual. Rather, the harsh political reality is that both institutions are paid for and directed by member governments. It's hardly surprising that those states use their leverage to try to advance their own agendas. Holding managers to account won't suffice unless governments hold themselves and each other to the same standards. This will demand, above all, greater openness and transparency at both institutions. This editorial was written by the Bloomberg Opinion editorial board. I'm David Shipley. For more Bloomberg Opinion, please go to bloomberg.com/opinion or OPI and Go on the Bloomberg terminal.
This has been Bloomberg Opinion. Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now we are moving closer to the closing bell. Full market coverage right here on Bloomberg, coast to coast, from New York to Beverly Hills. We take you to the bell and beyond. Joining us right now are our simulcast partners, Carol Massar and Tim Stinovic, joining myself, Romaine Bostic, alongside Caroline Hyde and Taylor Riggs. And Carol, you are somewhere out there in the wild.
I love this shot. You guys are great. Oh, there's two Carolines. This is amazing.
This is the joys of being live out here. But look, we have a lot of hard people working behind the scenes to keep this up and running. Taylor, kind of give us an update here on what we got on the markets. We're looking at a closing bell coming up in just a few seconds.
We are really interesting. I was taking a look at shares of Netflix. We're up 20% on the year, but the S&P, you're up 30% on the year. That is the earnings setup that we get you into this closing bell. Carol, really interesting. When we just take a look at an intraday chart, really trying to hold on to the gains of the session, the highs of the day. It is a broad-based rally. Most, if not all, sectors green on the screen.
We got a ProShares Bitcoin ETF, man. It is out in the market. So if we're looking for legitimization, I've been watching that up about 2%. It's first day of trading, something I'm going to talk about with Kathy Wood, because you do wonder about, guys, you know, Tim, what's next for the crypto market?
Yeah, that's the big question. Also, what's next for the S&P 500 as we get closer and closer to that all-time high reached back in September? We're just a few points away from that record of 45.36 and 5 consecutive days of closes in the green for the S&P 500.
Look, we're out here, of course, milking it. A lot of long-term thought here. Of course, I guess we got to give you the short-term measures here with 15 seconds here to the closing bell. Just going to run through the numbers real quickly here. 196 right now on the Dow Jones Industrial Average. That's going to give you about 0.5%. S&P 500 looks like it is going to finish the day just short of that record high, 45.19, up about 0.7%. The NASDAQ Composite up about 0.7% as well. You take a look at the Russell 2000, a relative underperformer here on the day, up about 0.4%, 2275 if you're counting, Carol.
Yeah, absolutely. And can I just mention Netflix just out with its earnings, just crossing the Bloomberg terminal. Netflix third quarter revenue, $7.48 billion. Looks like that is in line. And EPS, $3.19. And Taylor, that's a beat. The estimate was for $2.56 a share.
Yeah, really interesting. Third quarter bottom line, as you mentioned, $3.19, estimates of $2.56. The top line third quarter revenue right in line with estimates of $7.48 billion coming in there. And a third quarter streaming paid net change. This is an improvement up about 4.38 million. This is an improvement of estimates of a 3.72. So it is the third quarter streaming paid net change subscribers up 4.38 versus estimates of 3.72. And Romaine, you have to say, going out fourth quarter streaming up 8.5 million. That is also an improvement of estimates of an 8.32 million. So you're seeing an improvement on subscribers for third quarter plus fourth quarter. Am I the only one not watching Squid Games?
Yeah, this is the seesaw that we continue to see here. People get disappointed one quarter, and then, of course, Netflix bounces back the following quarter here. This is kind of the similar trajectory that we used to talk a lot about, of course, with Apple and iPhone sales here. You're talking about a company, and Reed Hastings, of course, who has been spotted here out in the wilds of California, really just finding a way to sort of keep people tethered to this service.
Doesn't even encapsulate Squid Games, I think, which has become one of the most successful launches ever for Netflix. But it's all about content being king and the ongoing narrative that people still, as we go back into the wild ourselves, as we start to go out, we still want to have great content. And indeed, they're able to build internationally as well as within the US, Tim.
Yeah, I certainly think that's the lesson of Squid Game. South Korean series that was popular and the #1 show in more than 90 countries and areas where Netflix operates. I imagine there will be many questions from investors on today's call and analysts on today's call asking about a sequel to Squid Game and also what the data tells them about other types of shows that will have the same worldwide appeal.
Yeah, there's so much data over there and their analysis, and it's also that, how much does it cost to create something? How much do I get out of it? Talk about the margins on Squid Game. We're also getting some headlines on Netflix and their outlook. Fourth quarter revenue, $7.71 billion. The estimate, it's a little bit higher than the estimate, Taylor, $7.68 billion. But this is a stock that's up, 18% so far in 2021, and it's now up about 2.5% in the after hours.
Yeah, 20% year to date, but still the underperformer to the S&P, which was up 32%. Interesting that in the press release, and I'm only on page 1 because it is thick and deep, is the APAC region, of course, they say was their largest contributor to membership growth with 2.2 paid net adds. Half the total of paid net adds came from the APAC region. So they're continuing to see improved service in that region. EMEA also adds a little bit as well. And Romain, this is interesting because I was reading the note from Lightshed Partners, Richard Greenfield, and one of his topic questions was, what is the impact of some of that international expansion? What was the impact of India as well? Given that you had a lot, I believe it was Jeff Bezos, right, commenting on their strategy overseas and how good it was, but that means that they could face then more competition in some of the pricing and the development overseas. So how much is that international expansion going to help?
A lot of competition, and of course this brings us back to the cost issue, as a lot of people will talk about. And of course it'll be interesting to see what he has to say on the conference call, somewhat scripted conference call here about cost, but also about the pricing power and sort of what they can charge.
And there's the controversy. Don't forget the Dave Chappelle new show. There's been questions being asked about that. There's been questions asked about the potential for labor shortages. Strike action that was going to be here in Hollywood managed to be averted, but how much is that a risk to content? How much more is there going to be wage pressure, wage inflation when you're rolling out these sorts of hits?
Yeah, really good question, Caroline. I wonder to what extent the company will actually even talk about that or answer questions about that. I also wonder if analysts, it's a point that Lucas Shaw has been making in articles. When we talk about the Dave Chappelle controversy, it's more of a cultural issue at Netflix rather than an issue when it comes to the company's business. But Netflix is built around its culture that, act like adults culture, and you wonder to what extent that is actually affecting the company up there in Northern California.
And then you also do wonder what's going to come up on the call with Reed Hastings and the rest of the C-suite there. I mean, their video game strategy, what are some different ways that they take that massive consumer base, that subscriber base, and how do they branch it out to different revenue streams? I mean, Taylor, lots of questions to ask on that call.
Yes, that is going to be something, of course, that we're going to continue to do on this show. In the meantime, I know we're also focused on Netflix, but we would be remiss if the majority, 4 out of 5, were not on the ground in LA, in Milken. So you guys, give me the update. What's been, Romain, some of the key themes, some of the key sort of learned a takeaway for day 2 out there in Milken?
I think this is really about opportunity, and you hear that so much from our guests here on the ground at Milken. We're going to get back to those guests in just a moment here, but they are here talking about not only the ability to make deals, but really about the demand and about the changing environment and how you navigate an environment like this. It's an environment that for some folks is challenging, but of course provides a lot of opportunity, Caroline.
A lot of opportunity, but you have to be willing to pay for it. And I think that's something coming from Scott Minerd, from the Howard Marks of this world, who are saying, look, it's not easy making deals. Julian Salisbury was just telling us that from Goldman Sachs Asset Management, that, it's never, people don't come and sit here and say, look, it's easy to make deals, or there's a really cheap deal on the offering. But right now, valuations are toppy. How are you making yourself distinct?
Yeah, that is certainly a theme that we're seeing with folks that we're talking to. Things are so expensive right now across asset classes. It doesn't matter if you're talking about, what you're talking about when it comes to equity or what you're talking about when it comes to real estate. Things are expensive across the board. Scott Minerd telling us actually residential real estate is the one area that he sees that's not overly priced.
Well, and speaking of assets, take a look at assets across a wide array of industries when it comes to M&A. I did a panel here with the global heads of Deutsche and Citi and talking about the M&A environment. It's on track for a record year, about $4.1 trillion in deals. They say it could be as much as $5 trillion, and it's tech, it's media, it's telecom. The big problem, though, they can't get enough bankers and employees to do all that they maybe would like to do. It's tough.
And perhaps not much distress. No one that worried about the Federal Reserve as it stands. Josh Friedman, of course, was looking at where you can put the money to work in real estate in the same way that we were hearing earlier from Scott Minerd. In particular, that's the area of distress that he sees, but really, in general, the money keeps on flowing.
All right, that's going to do it, guys, for our cross-platform coverage. Beyond the Bell, Carol Massar, Tim Stenovic, Romaine Bostic, of course, Taylor Rigg, and Caroline Hyde. And we're doing this as we watch Netflix up about 1.4% in the after hours. We'll join you again, same time, same place, California and New York.
You're listening to Bloomberg Business Week with Carol Massar and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, you are listening to Bloomberg Business Week. Carol Massar, Tim Stenovic. We are live at the Milken Institute Global Conference on the West Coast. And, man, take off the IFB and put on the mic headphones.
I put on the wrong headphones.
Just for those
who are watching on YouTube. I just put on the guest
Tim's
headphones.
looking at me, he's like, I hear nothing.
I'm like, I don't hear anything,
I don't hear programming.
What's on Netflix?
Well, you know, it's bouncing around. It initially dipped. Then we saw a rally of almost 3% or around 3%, 2.5%, 3%. Now we're off that high in the aftermarket, still up about 0.8%. We are seeing, I think, some positive numbers when it comes to the last quarter and also the outlook.
Yeah, shout out to everyone who's working so hard on our live blog right now. If you have access to the Bloomberg terminal, definitely check that out because that is where the analysis is happening. The jump in subscribers is the story so far. A big beat for Netflix. The company saying it sees the fourth quarter streaming payment net change coming in at 8.5 million. Estimates from analysts were 8.32 million. Third quarter paid memberships coming in above estimates, 213.6 million, beating estimates of 212.9.
Right, all about that subscriber growth, holding on to it, growing it, right? Remember, it's playing in global markets. Sees fourth quarter streaming paid net change up 8.5 million. That's above the estimate of 8.32 million. Third quarter streaming paid net change up 4.38 million. That, too, is a big beat from the estimate of 3.72. And as we said, we definitely have seen the stock moving a little bit higher in the after hours. But as Taylor mentioned to us, stock is up on the year, but it's underperforming the S&P 500.
Yeah, we'll continue to bring the latest. Also, check out that live blog for some analysis. Let's get a check of the latest world and national news. Nancy Lyons is standing by in D.C. Hey, Nance.
Hey, Tim. Well, it's been a busy day at the White House as President Biden attempts to break the impasse over a pair of major spending bills. And which one goes first, infrastructure or social spending? He's been holding separate meetings today with House progressives and moderates from both the House and the Senate. West Virginia Senator Joe Manchin says he wants action first on infrastructure.
We have the trust of each other, then we should be able to vote immediately on the bipartisan infrastructure bill.
Manchin has pushed back on the larger social spending bill, saying it's too pricey. Pfizer CEO Albert Bourla says he believes mixing and matching COVID-19 vaccines and boosters is doable and could provide more flexibility in administering shots. He also told Bloomberg today he expects to receive word from the FDA by the end of the month concerning the request for emergency use authorization of the Pfizer vaccine in kids from 5 to 11.
I know when they have scheduled their advisory committee, and it is before the end of the month. And typically in all these cases, FDA makes decisions within 3-4 days max.
Bourla says that shot would be about a third of the dose given to adults. And he says the company would be able to provide it almost immediately. There may be a glimmer of hope for U.S. employers who are facing an acute labor shortage. Job has finally overtaken unemployment as a search term for the first time since March of 2020, according to data from Google Trends. That could be a promising sign for a labor market where job openings have outpaced job applicants. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Story, Carol, that has anything about taxes or written by Laura Davison. It goes into among the most read on the Bloomberg terminal. This one, no exception. Democrats are floating a $10,000 threshold for bank account reporting.
That is fascinating. Okay, it's an attempt to catch tax evasion by the wealthy and boost federal revenues. The plan would help fund President Biden's multi-trillion-dollar economic agenda, potentially raising $700 billion and reducing the need for tax increases to offset the cost of new social spending. This is Interesting.
Yeah, Democrats say the plan to catch tax evasion by the wealthy, boost federal revenues. It's critical to address inequalities in a tax system that forces middle-income people to pay all they owe, while high earners can shield their incomes from the IRS.
$10,000 seems like a low threshold.
It does. It
right?
does. Well, total annual or inflows or withdrawals of at least $10,000. One of the criticisms that we've seen leveled against the IRS, especially by Democrats, is that they don't have the person power in order to
do this.
In order to do this,
The oversight, right?
Exactly. And for so many years, the agency has been reduced in power as a result of budget cuts, that they're not actually very effective in catching all of the people who are not being honest when it comes to their taxes.
Right.
And if they were, the U.S. would be able to raise a lot more money.
Yeah, I mean, it's tricky. Sometimes I feel like there's just, I don't know what the answer is, but this is also, though, a sign of the back and forth that's going on in Washington, right, when it comes to President Biden's massive infrastructure. I mean, that's the bigger picture here, the bigger story. This is the horse trading that's going on right now among the Republican and Democratic parties right now. And we'll see ultimately, you've got this massive infrastructure plan. It's been whittled down, but you still got to pay for it.
And how are you going to do that?
Right, exactly.
Is it through stepped-up enforcement of the IRS? Is it through changing what is reportable, what's not reportable?
Yeah, exactly. And so these are the details that are being worked out. Anyway, this story certainly getting read on the Bloomberg terminal. Carol Master, Tim Stanovic, and you are listening to Bloomberg Business Week.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. After hours, Netflix shares after earnings up now by 0.8%. Netflix posted its strongest subscriber growth of the year, beating Wall Street estimates thanks to the popularity of Squid Game, its breakout drama from South Korea. The company added 4.38 million subscribers in the third quarter, exceeding projections of 3.72 million. Netflix also expects to sign up 8.5 million customers in the final 3 months of 2021, compared with Wall Street estimates of 8.32 million. Again, keeping an eye on Netflix after hours, up now by 0.47%. Equities extended a rally 5 in a row for the S&P 500 index's solid corporate earnings helped counter concerns stemming from elevated inflation. S&P up today by 33 points, up 0.7%. The Dow up 198, up 0.6. NASDAQ up 107, up by 0.7%. 10-year yield 1.63%. Gold up 0.3%, 17.69 the ounce, and West Texas Intermediate crude up 0.5%, 82.83 a barrel on WTI. So again, recapping, a Netflix beat, S&P up 33, up 0.7. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, let's get to, we've got a great guest, and we're going to get a great perspective on what investors who have lots of money to put to work are most interested. Let's get right to it with Julian Salisbury, Global Head of Goldman Sachs Asset Management, with us on site at the Milken Global Conference. How are you?
Great, thank you.
So, the environment. People eager to put money up, a lot of things going on?
Look, we are in a record fundraising environment, a record capital deployment environment, and a record environment for monetizations from those same portfolios. So,
it's overwhelming the amount of money that is coming into the investment space at large.
If you look at alternatives, just the top 5 listed alternative managers raised, I believe, $153 billion last quarter.
It's crazy.
$440 billion of dry powder. That's 2x the amount of dry powder that existed 5 years ago. That being said, while that may seem overwhelming and concerning to some extent, the magnitude of the opportunity has also grown substantially. If you look at...
Explain that in terms of the options that are out there.
So, well, first of all, if you just look at M&A activity, we just had a $1.6 trillion quarter for M&A, the biggest quarter ever. That's 5 consecutive quarters of north of $1 trillion.
I just did a panel with global co-heads of Citi and Deutsche, and they said we're on track for like 4.1 globally, and they think it could be 5 trillion.
Yeah,
it's nuts.
I mean, and if you look at the share of that that's being prosecuted by sponsors, I mean, last year 31% was a record year for the share of M&A activity prosecuted through the private equity community.
Right.
This year it's running at 36%, so it's a higher percentage of a higher volume. And I think that greater opportunity set is a function of a number of things. First of all, we had a pretty big pause last year where there was a dearth of activity for, really a 6-month plus hiatus of activity. And now off the back of that, if you look at the accelerating trends that were already taking place in the global economy, many of those trends were just accelerated by COVID. And now I think there's, in addition to the pause and the catch-up, there's a greater sense of urgency to transform your business, whether it be through M&A, through investment, through digital transformation of the business, and all of these things are leading to people wanting to raise capital.
But Julian, are you finding effective places to deploy all of that capital? We spoke to Scott Minerd. We're going to air the interview in just a few minutes. He said this is a period of time where he looks across asset classes and things are so expensive, with the exception of residential real estate.
Yeah, I was talking to somebody about this earlier today. I can remember back as far as 20 years doing business planning. I've been at the firm for 23 years. I don't quite remember the first 3 years.
Why is that? Wait a minute. Okay.
Maybe I wasn't invited to business planning the first 3 years. But each and every year that I can remember, we sit every year, including, the end of 2009, when things were still pretty difficult. Like every year you sit there, how are we going to make money last year? Because when you look back, it always seems, it was so obvious with hindsight how you made money. It was never that easy. It was never that obvious. And I think it's true today. That being said, it is, valuations are particularly high on many metrics. Growth in particular, relative to value, is expensive on many metrics. But it's always more complicated than that. I look at take our growth equity investment committee. Every week, 2 to 3 companies come through that committee that are capable of being multi-billion-dollar companies that didn't exist 2, 3, 4 years ago.
Right.
And they won't all win. Some will not succeed. Some will go on to be worth tens of billions of dollars. And by most valuation metrics, traditional valuation metrics, frankly, don't really work when you're looking at these businesses. Any kind of near-term revenue multiple, earnings multiple, you really have to look at what's this company capable of becoming over the next 5 to 10 years,
right,
and taking a more forward-looking view. And I think that's another reason why more of this is being conducted in the private markets, where people are able to take a longer-term view, focus on things like unit economics.
Does it create healthier companies that ultimately do go public, whether it's through a direct listing, whether it's an IPO, a SPAC, because they're able to kind of incubate for longer periods?
Yeah, I think that, look, private markets are a great way for companies to scale and grow. The public market route is also a very valuable tool for capital raising for companies.
You guys make money when companies go public.
and including raising money through traditional IPOs or SPAC.
Yeah.
There's room for all of these things.
Yeah.
But I would say that the patience required to scale some of these businesses, the capital that's required to scale some of these businesses in the early instances, it probably is easier to prosecute that in private markets. And also, look, some of these companies are they're often quite small.
Yeah.
They have a few senior entrepreneurs at the top of they need real kind of help and guidance and governance growing the businesses.
Hey, Julian, I'm wondering what the questions that the clients of Goldman Sachs Asset Management are coming to you with right now. What are they
Should I
looking
buy
for?
Dogecoin? Is that what they're asking you, Julian?
I'm not sure I'm going to comment on the value of any individual cryptocurrency.
No, but you know what I
at this
mean.
point in time.
There's some interesting trends out there.
Yeah, I think that everybody's struggling with this question of where to deploy capital. They can't make the returns that they need through traditional fixed income product. They look at equity markets, which have been and will continue to be a great source of return over the right time horizon. I always think there's a very large room in your portfolio for public equities. It's not all about private markets, but what they're looking for is ways to pivot into private markets as an alternative source to the lack of return that's really available in fixed income.
Just got about 25 seconds left here. What do you think is the investment people, maybe it's not on everybody's radar, but they should be watching closely, just quickly? I know. Don't say rowing. Don't say canoeing.
No.
Kayaking.
Kayaking. Hurry up, clock's ticking. Come on, Julian.
Okay. I think the transformation that's going to happen in real estate over the next 5 years is underappreciated.
Residential, commercial?
All forms of real estate.
Nicely done.
Yeah, got to get you back.
Julian Salisbury, Global Head of Goldman Sachs Asset Management, right here on Bloomberg.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
It's Bloomberg Business Week. Tim Stenovec and Carol Masser live at the Milken Global
If you're watching me on
Constitute.
YouTube right now, I've got...
You've got wires just everywhere.
You know, we are a high-tech world. Hey, listen,
It's
coming
been
up...
a busy day.
This was a great conversation we had earlier this morning with Scott Meinert.
Yeah, Guggenheim Global's CIO. You do not want to miss it. He's going to talk all things market headwinds and bubbles in just a couple of minutes.
History. He gets to history.
He does get into history.
Yes.
World wars.
We'll get to it in just a moment.
In the meantime, a check of the latest when it comes to the trading day in business news. Here's Charlie Pellett.
Hi, thank you very much. Breaking news now. Red headline on the Bloomberg earnings out of United Airlines. UAL reporting operating revenue for the third quarter that beat the average analyst estimate. We also heard from Netflix posted its strongest subscriber growth of the year, beating Wall Street estimates thanks to the popularity of Squid Game. Its breakout drama from South Korea. The streaming service says 142 million households watched the show in its first 4 weeks. First day of trading for the ProShares Bitcoin ETF, up today by almost 5%. Equities extended a rally as solid corporate results helped counter concerns stemming from elevated inflation. Now, as for the market backdrop, Kate Fettis is President and Chief Investment Officer at Grace Capital.
You have to look at the fundamentals. You can't look at the tape and get scared or get excited. What has really changed? Interest rates are still zero. Where are you going to put your money? We have baby boomers that are retiring. We have 401ks that need a place to go. They're going into equities. I don't see anything changing.
S&P up today by 33 points, a gain of 0.7%. The Dow up 198, up 0.6%. NASDAQ up 107, up 0.7%. 10-year down 10.30 seconds. 10-year yield now 1.63%. Spot gold up 0.3%, 17.69 the ounce. And West Texas Intermediate crude up 0.5%, 82.81 a barrel. Again, recapping stocks higher. S&P up 33, up 0.7%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
It's back. We're good.
All right, Charlie Pellett, thank you so much. You are listening to Bloomberg Business Week. Carol Masser along with Tim Stenovec here at the Milken Conference.
Well, earlier today, we spoke with Guggenheim Global CIO Scott Meinert here at the Milken Institute Global Conference. It was a great conversation, and in this excerpt, Scott discusses market headwinds and bubbles. Check it out.
I have never seen a time like this where there is nothing that I can point to that I can call cheap. You know, historically, I remember being interviewed on Bloomberg in 2006 and telling the interviewer that the cheap thing was 10-year Treasury notes at 5.25. And they said, well, who would want 10-year Treasury notes? Well, you know, I was concerned about the housing crisis. Today, I can't point to anything that I think that if we got ourselves into trouble, that would actually be cheap to buy today, that has value. So you're left in this world, which I'm not real comfortable in, where you have to find things that are expensive that are probably going to become more expensive. And so,
Such as?
Well, I mean, cryptocurrency, right? You know, I mean, Shiba, if you invested in Shiba coin back in the first quarter of this year, $1,000 today would be worth 2.1 million, right? I mean, can I find another Shiba coin? I don't know, but...
Okay, but we're talking about something that a lot of people think is a joke.
Well, Shiba coin was a joke created to mimic Dogecoin, which was a joke, right? So, I mean...
Those cancel each other out?
Yeah, well, I don't know. It's a second derivative joke or cryptocurrency. But, you know, it just shows you how much cash is out there, how it's lifting asset prices. Like, I was asked at the Federal Reserve to do a thing on bubbles. And what markets did I think were in bubbles? And I went through every market I could think of. And the one I said, sports memorabilia is in a bubble. Baseball cards are clearly in a bubble, right? You know, you look at stocks, right? Are they in a bubble? Well, not with interest rates where they're at.
And isn't it so much of it, Scott, kind of a bounce back from falling off a cliff?
and things recovering? Or do you think, no, we've done that and then we've done a little bit more?
Well, I think, you know, normally at this point in a recovery, I would say, oh, you know, we're kind of in the second or third inning, right? Like when the Dodgers are winning the World Series. But that, you know, this is like we went right to the fifth inning. You know, the incredible rally that we've got coming out of the pandemic and the amount of stimulus. You know, people compare this to a war, right? The pandemic was a war. And so I've gone back and I've studied wars. And when you get, there is an interesting corollary is when you have a major war like the First World War, the Second World War, right after the war is over, and there's been all this stimulus from defense spending and money printing, you get a spike in inflation, which is transitory. So when people talk to me about, is this transitory, which I'm always like, everything's transitory, life is transitory, but you know, is this something that is permanent, and should we be worried about it in the long run? And I think today the answer is no. Well, if you look at all the things that have gone up in price that are in the CPI components, you've got hospitality industry stuff, hotels, airlines, automobiles, right, which are due to the supply chain interruption. You know, it's really a bounce back from what we had in the decline. Now you can say, well, wait a minute, Scott, autos. Well, look, the supply chain interruption to me looks like the retooling that occurred at the end of the Second World War, right? All output, auto plants, everything had been converted to wartime production. There was a transition period in the mid 40s. And during that transition period, people who had saved all this money from the stimulus from the war wanted to spend it, and so auto prices went up. But, you know, it's interesting is there was one period in there, I think it was in 46 or 47, where inflation actually was at 20%, but bond yields never went above 2.25.
Which doesn't quite make sense, does it?
Well, I think we're living in it today.
What a great way to wrap up that interview. Guggenheim Global Chief Investment Officer Scott Minerd, well known to the Bloomberg audience. He caught up on a great panel with our own Scarlett Fu here at Milken, and he joined us earlier today to sit down. But I love how he looks at history and likens after the World War II to where we are today.
And I have to say,
some difference.
You know, if you were watching on YouTube, you probably saw my jaw dropped when he mentioned Dogecoin. I couldn't believe that word came out of his mouth.
But he's someone who, you know, he looks at all the different asset classes, tries to understand the relationships, and, you know, why is something, you know, going up, something going down, what's going on more broadly.
I think also he used it as a point to illustrate the exuberance that we're seeing in many different parts of the market right now.
Yeah, I'm not going to ask our own Charlie V about Dogecoin. No, it's not.
He's on set with us, helping us make sure that this broadcast is working. Thumbs up to Dogecoin, Charlie? Thumbs up, okay.
Thumbs up. All right, check out that full interview. You can find that online and on the Bloomberg. All right, let's get to World and National News. Back to that and Nancy Lyons.
Thanks, Carol. The Food and Drug Administration is moving forward with new guidelines that would allow people with mild or moderate hearing loss to get a hearing aid over the counter without a prescription or medical referral. Health and Human Services Secretary Javier Becerra says it's a game changer for the roughly 30 million people who have some form of hearing loss.
We opened the door to an easier process and a more affordable process for people to have access to good quality hearing aids.
Becerra says the proposal, if approved, would allow devices to be ordered online or bought at pharmacies. The FDA says only a fifth of those who have hearing loss are actively using a hearing aid, so the new guidelines could increase market share and lower costs due to competition from hearing aid companies. The House Select Committee investigating the January 6th Capitol riot today will take up a contempt report on former President Trump's ally, Steve Bannon. He's refused to comply with a subpoena to testify. If the committee approves the report, that will be the first step toward finding Bannon in criminal contempt, possibly leading to prosecution. The gang that kidnapped 17 Christian missionaries in Haiti over the weekend is demanding $17 million in ransom. The gang grabbed the 16 Americans and 1 Canadian after they visited an orphanage near Port-au-Prince on Saturday. The people being held include 7 women, 5 men, and 5 children, one of them an 8-month-old baby. The FBI and Haitian police are in contact with the kidnappers, but the defense minister says negotiations could take weeks. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Thank you so much for that update, Nancy Lyons. Tim Stenevec and Carol Massar live in Beverly Hills at the Milken Institute Global Conference.
Yeah, and I got to say this next story that's on the Bloomberg by our Brendan Case, Leslie Patton, and Kim Chipman, it talks about food shortages. This is something that the Milken Institute has looked at when it comes to food shortages globally, but also in the U.S. And they've talked, I actually did a panel a few months ago talking with the head of a supermarket chain and just someone from Unilever, a senior executive, but just looking at the food waste that goes on in society. And you have that going on, like 30 to 40% of food gets wasted. And at the same time, you have people who don't have enough food. And how can that be? And now we have food shortages.
Yeah, shocking anecdote. That opens the story by our own Brendan Case, Leslie Patton, and Kim Chipman. In Denver, public school children are facing shortages of milk. In Chicago, a local market is running short of canned goods and boxed items. There is plenty of food. It's just not always enough processing and transportation capacity to meet rising demand as the economy revs up.
Yeah, it's interesting, and I think this is going to be, here we are with supply chain shortages.
Yeah.
We're looking at energy dislocations and food. I mean, this is something we all take for granted, although the pandemic reminded us as we walked into a supermarket, if we were willing to dare and go in, empty shelves of things.
Toilet paper, anyone?
Toilet paper, but, even some
Flour.
supermarket goods, flour, and it was, I think, a shock, to say the least.
Well,
for many of us.
here's what's particularly surprising about this. It's not that there isn't enough milk. In Denver, for example, there are broken parts at the milk supplier's plant. That's affected shipments of half-pint cartons on top of disruptions at one time or another in cereal, tortillas, and juice. So it's not that they're actually low.
Supply chain issues?
Right. It's that if you can't fix one of these things because that part is stuck on the port off of Los Angeles or Long Beach, it's not going to get fixed.
Hence, this is why you start to see a slowdown. And the concern is, and this is something we ask the CEOs who are reporting earnings, what does this mean, and what does this mean for growth going potentially for their companies, but then also plays into the broader economy. This is Bloomberg Business Week. Carol Massar, Tim Stenevec, and you are listening to Bloomberg Radio.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Earnings after the bell. United Airlines Holdings posted a narrower loss than analysts had expected as a dip in demand from a summer surge in the coronavirus Delta variant proved fleeting. Shares of United UAL up now by 2% after hours. Netflix posted its strongest subscriber growth of the year, beating Wall Street estimates thanks to the popularity of Squid Game, its breakout drama from South Korea, up now by about 0.4%. And from our Top Live blog, Netflix says it does expect to see positive cash flow next year. Equities extended a rally 5 in a row for the S&P as solid corporate results helped counter concerns stemming from elevated inflation. S&P up today by 33 points, up another 0.7%. The Dow up 198, up 0.6. NASDAQ up 107, up 0.7. 10-year yield 1.63%. Spot gold up 0.2%, $17.68 the ounce. West Texas Intermediate crude oil up 0.7%. $82.99 a barrel. Did spend much of the day above $83 on WTI. Bitcoin up 4.7%, 64,240 on Bitcoin. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right. Well, she has been a longtime public servant. We've been having a good conversation behind the scene. Former Labor and Transportation Secretary, worked in several administrations, the Reagan administration, President George W. Bush, President Trump. We welcome the Honorable Elaine Chao. So nice to have you here with us.
Thanks so much. It's great to be here.
Well, it's interesting. You know, labor, transportation, I feel like these are the two hot topics right now. We're looking at, are there changes going on in the labor force? Will we never go back to levels in terms of the potential workforce that we saw pre-pandemic? Let's start there. What do you think? What are your observations of it?
Well, it's great to be here at the Milligan Institute because these issues are being discussed. And I just came from a panel discussion with 5 large employers who are talking about what will be the work patterns of their employees in the future. They're taking polling more, they're asking their employees more. And clearly some kind of hybrid working environment arrangement will be much more accepting to employees. And I think employers are trying to work this out.
Right.
And, you know, at first they were going to come back to work. The workforce was going to come back to work last September. Then it was last December. Then it was the spring. Then it was going to be September. And now people are talking about spring of 2022. So clearly we're all feeling our way as to how to come back at that.
But it's changed, right?
It has. I think it's changed, at least very much in the short term. It's greater flexibility. And this is going to present challenges to the labor laws, because so much of the labor laws are over 70 years old, and they think about a workplace that is, you know, fixed and that has a 40-hour work week. People come to work.
Right.
And so all of that is going to change, and that's going to put tremendous impetus on changing the labor laws, which are traditionally very, very difficult to change because they're so fraught with politics.
Yeah.
There is this imbalance happening, though, right now. When we look at the labor market, there is an oversupply of workers, and but they are not actually returning to the workforce. Do you think we ever get back to a workforce that looks like it looked before the pandemic? Like, is it realistic for us to think about it from those numbers?
Yeah, it's even more before the pandemic. When I was labor secretary, the labor participation rate was about 66%, with a workforce of about 157 million people.
Right.
And then we had the Great Recession. And then the labor participation rate dropped to about 63, and it kind of never recovered. And with the COVID then, it went from 63.3 or 4 down to 61.7, 61.1. So we're continuing to see declines in labor participation, which is terrible because we need these workers to come back to fuel a full recovery. But there's also another factor, another dynamic at play here, and that is the skills gap.
Yeah. Well, we've been talking about this for years, Elaine.
Yes.
And I'm going to throw in another problem. We've been talking about infrastructure for years. How many administrations, right? And this is something that has had bipartisan support. What ultimately, from your perspective, do we have to start spending on when it comes to infrastructure?
Well,
look at the supply chains and the
I'm
problems.
for, obviously, investing in transportation infrastructure. The reason that the Trump administration was never able to succeed in the infrastructure proposal was because there was a big debate about whether there should be $1 $1 for $1 of investment spending. And the Republicans believe that there can be leverage, that we can use public-private partnerships and leverage, existing government dollars. And the Democrats felt that they wanted $1 for $1 deficit spending, which obviously the pros and cons to both. So we were never able to galvanize enough consensus around public-private partnerships. This time around, I think there could be. I think there's an infrastructure bill, a transportation infrastructure bill to be had. Unfortunately, now it's being held hostage to the budget reconciliation bill. If it were to be standalone, there is a deal to be made and passed on the infrastructure bill. And I'm hopeful that it would be passed before year end.
I feel like politics. I mean, I want to ask you, because you've been in politics for such a long time.
I'm not in politics. I am a public servant. I've always viewed myself as being in public service.
I did say were a longtime public servant. The Republican Party. If I think about the January 6th Capitol riot, you resigned after that.
Yes, I
did. You
did.
left the Trump administration. You were there, almost to the end. Do you regret being part of that administration?
I'm very grateful for the opportunity to serve my country. I'm an immigrant to this country. I came when I was 8 years old. I didn't get my citizenship until 19. And it used to be that if the president asked, the only answer you can give is yes. I didn't know the president very well, but I also believe that the American people deserve to have a functioning government. But going back to the infrastructure bill, the real drama is on the Democrat side. Because as I mentioned, there is a bill to be had. There was bipartisan support. Republicans signed on to this infrastructure bill.
Right.
But the speaker, and she and I share a birthday, by the way. So she's in a tough, she's in a tough spot.
Yeah.
Because she's got moderates who want to hold back on the spending. She's got progressives that want to spend more. So she's trying to balance that.
Right.
But if left alone, that infrastructure bill can move on its own. So all the drama is on the Democrat side.
And you know this. You follow what's been going on in the economy, certainly in the pandemic. Milken covers this left and right, the inequities that we have seen. And it's not new. And there are people who have not shared in the wealth creation. And so that softer infrastructure that the president and his team are trying to get through, I mean, this is part of the battle. And
I think for those people that are question that, they're not saying that these social infrastructure proposals are unworthy. What they're saying basically is, should they be included in what was originally going to be called a transportation infrastructure bill?
But you know how politics works. That if okay, we got infrastructure done, we're done.
So it was originally the original infrastructure bill had only 6% of what is traditionally defined as transportation infrastructure. If you expand the explanation and the description a bit more generously, you get up to 30% of the dollars. But clearly, there is a need for transportation infrastructure: roads, bridges, transit, ports, airports.
Drive around New York, right?
Absolutely. A governor got elected on this. I won't repeat her slogan.
We have to ask because we only have about a minute or so
I know you consider yourself a public servant, but we got to ask more politics.
Oh, shoot. Why?
Are you talking with Donald? Have you heard from Donald Trump at all?
We have not spoken.
Not at all.
But I'm not, I'm out of politics now.
You are, but you did
I've
serve
always been in
three,
public policy.
You served in 3 administrations. Do you consider President Trump as the leader right now of the Republican Party?
Well, I think that is in the process of being decided and sorted out. There's still some time to go. There's 2022 coming up, and then there's 2024.
Should he be the leader of the Republican Party?
That's up to the people. I think for those who wonder about his appeal, they should be asking, what is it that prompts so many Americans to support him? And I think that's the answer will be very, very revealing. And it's a teaching, it's something that I think, leadership should understand.
But as someone who came to this country as an immigrant and became a citizen, do you think, a voting citizen, that he should be president? Or should be the leader? Should be leader of the Republican Party.
I will support the nominee. I'm a Republican, so I will support whoever the nominee is.
Okay. Oh my gosh, I wish we had more time. You have such great energy. Thank you.
Thank you for having me.
And come at things from so many different perspectives. Elaine Chao, of course, former Secretary of Transportation, former Secretary of Labor. I remember talking to you years ago when the monthly jobs reports came out. So some great history. We've had another great day at Milken.
And it's only day 2.
I know, we have one more day. And I'm going to talk to Kathy Wood in a few minutes.
All right, go get ready for that.
This is Bloomberg.
Innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Emily Chang.
Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, Netflix once again surprises a big beat in global subscribers, and it has nothing to do with Squid Game, which isn't even reflected yet in this quarter. Shares up in late trading. We'll break down the results. Plus, trading in your pandemic sweats for designer digs. Rent the Runway has revealed that subscribers are rebounding as the company looks to head to the public markets at a $1.3 billion valuation. And live from LA, we'll bring you the latest from the Milken Institute Global Conference. Bloomberg's Carol Massar will sit down with Kathy Wood of ARK Invest later this hour. We're going to get to all of that in a moment, but first let's get a look at the markets with Bloomberg's Kriti Gupta. And Kriti, a rally in stocks today. What did you see?
Absolutely, Emily. Green on the screen, and once again, tech, that really key outperformer. But it wasn't tech alone. Check out what rallied with it. Of course, those Chinese ADRs, the thing that's having so much regulatory scrutiny, really weighing on those shares. Today, they were the outperformer, up over 3% in the session. And of course, now that we have a little bit of after-hours trading, you are seeing Bitcoin slipping from its highs today. But during the session, actually very strong reactions in Bitcoin, despite some of that news about Bitcoin futures. The big concern there was, would that detract from some of the populism around crypto assets in particular? But Emily, that is not the case. Looks like it's still got about a 4% bid in today's session. I wanted to bring it back to those big tech stocks, though, because they did lead the index lower over the last couple of months. But in the last 6 sessions, they've actually been leading it higher. And here I'm using Apple as kind of that proxy for those big tech names. You can really see Apple in the last 4 sessions in particular having a pretty good day. If you widen that out to Google or Alphabet or Microsoft, it becomes 5 or 6 pretty good sessions of gains. Facebook or Amazon, still a couple good sessions. So this is pretty interesting, very reflective of what you're seeing in the broader index. I want to end with the major after-hour story, and that, of course, is Netflix. Shares were up as high as 3% after hours after they beat their subscriber growth. Bloomberg was estimating 4.4 million total subscribers, Emily. They came out with 3.7, now projecting 8.5 million next quarter. So some good news out of Netflix. And on top of that, just to put that cherry on top, you did see they say that they are going to be cash flow positive, next year. That did, like I said, move shares after hours up by about 3%. But looks like pairing some of those gains, and even Disney was ticking higher. Once again, looks like pairing some of those gains, Emily.
All right, Kriti, thanks so much. I want to stick with Netflix now and bring in Andre Swanston, Senior Vice President for Entertainment and Media at TransUnion. Andre, good to have you back here on the show. So look, strongest subscriber growth of the year, even as the world continues to reopen. We're getting off our couches and going to work. Are you surprised by this?
No, I'm not at all. Actually, I think contrary to what a lot of other people think, and I really thought that the projected number was quite low and that it would be higher coming off of probably their worst quarter ever, or at least in the last 4 or 5 years. Typically, when they've had a really, really poor quarter in terms of subscriber acquisition, the increase or the following quarter is really, really substantial. And so I actually think that this was less of an increase than I would have expected to be.
So is that because Netflix is doing something wrong?
I think it's because Netflix is not really doing anything different than it has historically done. And so Netflix has been right so many times when people have doubted their strategy. I think a lot of people thought they were investing too much in international content years ago. And that's, although it wasn't reflected in its numbers, I think that holds true with the success of Lupin and Squid Games and other things. The challenge, though, is that they're still very slow to diversifying their revenue stream. And I think the concern that I would have is that when you look 3 or 4 years out, I don't think anybody doubts that a Disney Plus will probably have a larger subscriber base than Netflix. There's others that are challenging for that premium subscriber base as well, but they still don't have an ad-supported offering. The transition into gaming has been very slow. There's the diversification of revenue. There's some merchandising that they mentioned, but that doesn't compare to what a Disney or NBC Universal does. And so I think that's the biggest challenge, is that it's pretty much just more of the same.
Interesting take. Obviously, Squid Game has been the talk of the last few weeks. Netflix just announced it's been viewed in 142 million households. And, you know, sort of the devil's advocate case here is that a company like Disney can't put Squid Game on Disney Plus. I mean, it was a risk for Netflix, and clearly it's paid off. So what makes you think they won't be able to keep on bringing hits like this and beating Disney or HBO or some of these others continually going forward?
Yeah, well, you know, they say the past is prologue. If you look at the amount of dollars that Netflix has invested into content over the last 5 or 6 years, they've spent more money than just about anybody. And you know, we still get riled up in terms of the media world whenever there's a huge blockbuster success with whether it's a TV show or a movie. Contrary to that, it's big news when Disney flops, because the expectation is that their content is going to be so successful and so valuable. And so when I look at Netflix, if Netflix's challenge or their battle is to just outproduce content that is better or more global or more valuable than Disney or NBC Universal or HBO, I don't think that's necessarily the game that they want to play. Because all those companies have much more ways to monetize their audience than Netflix does. And so just even to kind of stand pat over the next few years, they actually do have to have better content and bigger hits, which I think is challenging.
Interesting. Well, speaking of content, Netflix has been embroiled in a very public controversy about its Dave Chappelle special and comments that he made about trans rights. Co-CEO Ted Sarandos has defended the decision to put this on their platform. Netflix employees, some of them really not happy about this. What's your take on how much this impacts the broader Netflix story?
You know, I haven't thought much about what the impact will be to Netflix and broader. I think there's always a challenge between when you look at freedom of speech and an artist or an actor, comedian, producer's right to be creative or to address issues. At the same time, you have to be respectful of the different constituencies that consume your content and where it's distributed. And I think that's really up for Netflix to make their own decision. I will comment on what they're deciding relative to that, but I think people need to be able to face the consequences for any decision that they make. So if they're standing behind the show or the special, I think that's their ability to do that. And whatever the repercussions of that if that impacts their subscribers.